As the equities market winds down for the week, RT, Briscoe, FTN, cocoa processors, and Niger Insurance were some of the top gainers in the market today. Rotimi Fakayejo, a capital market analyst, joins me now to review the trading week as we explore what market catalysts will drive the momentum for equities in the second quarter. Thank you so much for your time today, Rotimi. Before we get into that conversation, let's first understand what we're seeing play out with in the trading day today.
The market closed flat, and we had an increase in volume and value traded. Unlike yesterday, where the value traded was about 2.4 billion. Today, the market traded above 4 billion naira. I think that is quite a great improvement to end the week. And we didn't see much of a traction in the price of securities, though we saw the likes of GT at least having been marked down for dividend payment yesterday, gaining at least about 30 kobo today. So we believe that we're going to be seeing trends like this, a major reduction in the market capitalization due to dividend adjustment of prices, and a price adjustment due to dividend payment, and we're going to be seeing that play out in the next 1-2 weeks. When the various securities
so more or less down. Investors are latching on to those stocks that are whipping out the dividends here.
Yeah.
All right, let's see. Looking at what we saw play out yesterday as well, we saw that profit-taking activities in GT, we saw MTN as well, and Zenith take place there. But for you, though, do you think we're going to see this trend continue in the medium to long term going forward?
Well, I think the trajectory we've seen in the first quarter may not really see much. We see it fade out in the second quarter, because what may really happen in the first month, which is April of the second quarter, is that the Q1 results are going to be released. Market will react positively, but thereafter there will be nothing to catalyze any major movement within the market. So we're going to see stability in the market and also a drag down for quite a while until we begin to enter into the end of third quarter again, when the market to begin to boil with more activity.
Yeah, because in the first quarter, we saw quite a lot of activity play out there, listings, some corporate actions as well. Is there any major one in the works coming into the second quarter for you?
Well, I think for some securities that are yet to release their full year results, the auditor reports, I think those ones will be coming in the second quarter. So, and there aren't too many of them. Just a few on the table, and I think that may not really have major impact on the market. But we don't really see much of a traction after the end of this first quarter. The market, as you said earlier on, and the Osha index is at 9.9% positive year to date, and I think we may be able to stabilize that, or that level of gain for the market may actually come down a little, maybe to like 7% as we move into the second quarter proper.
All right, but looking at how investors are positioning, though, in terms of the quarters for the banks, we're seeing them still keep driving those values there in terms of market activity there. But for you, though, a bank like Access Bank, and looking at what we've seen play out there, they're going to change their structures very soon. Do you think we're going to see similar reaction to what we saw play out with, say, GT?
It will most likely happen, because what normally transcends is that when a company transcends from the former structure that it is to a to a holdco, the PFAs in the time past used to treat such company as an entirely new company, just as it happened in the of FBN Holdings. But I think the situation is changing gradually, and we may not really see much of it. But most likely, as we saw a downward trend in the price of GT after it was announced, there is no way we won't see the same thing playing out for Access. But the only thing that may happen is, at the same time, we've seen the performance of Access Bank actually improving so much, having done a gross earning of over 900 billion and a profit after tax of 160 billion. And I think that also may play out better for them in the Q1 result. So with that in place, they may be able to stabilize the price that they are now, or even move a bit higher. So it may not really play out as it were if they turn out a very good Q1 result.
Well, now let's get to the industrial space, and I'd like you to speak to what you think excites you in terms of that space. Looking at what we've seen play out there recently with news flow coming out with the Dangote fertilizer plant being launched. But I'd like you to quickly just speak to that point and what you can expect.
Well, Dangote fertilizer, the listing will come very quickly to the market, and I don't know whether there's going to be some concessions that will be given to the listing period, to the period that the company ought to have operated before getting listed. I believe they should give them some concessions because it's a very, very vital part of the economy. That being said, I still believe that the cement manufacturers are still going to hold the market very, very strongly. And we've seen a lot of profitability, improvement in their profitability over time. And I think Lafarge and Dangote Cement may actually be the ones to watch in this very sector.
All right, definitely quite a lot to look forward to. Thank you so much for your time on the show today. I'll be speaking to Rotimi Fakayejo, is a capital market analyst. Now,